everybody, it's Chris here from Serene Education with the 4 Majors Notes update for the 28th of May 2013. Good morning, folks. Hope you had a nice bank holiday weekend. Nonetheless, let's crack on and see what the 4 Majors are doing today. Not a lot of news out today, as I'm just looking at the fundamental side. However, going on sentiment from last week, there was not a hell of a lot of movement yesterday because we had a bank holiday in the US and we had a bank holiday here in the UK. So not a lot of liquidity on the market yesterday, and that's pretty much reflecting on what we saw yesterday. If I just take you to the daily chart, you can see we had a lot of indecision. This morning we had a slight move to the downside, however, pulling back to the upper end of this candle here. But you can see the indicator box very much indecisive. No true, there's more red than blue, however, very speckled, and no clear direction. And you can see price, what price has been doing on the euro recently, pretty much arranging, not breaking the current all-time low that we've seen this year, which happens to be the 1270 mark here that we saw in the early parts of March, and not going any higher recently than these levels here at the 38.2 Fib retracement here on our monthly at the 13149 mark. A lot of bearish engulfing candles here, evening stars at this level here. What we can see, however, is all the moving averages above price was still a negative indication. We are still making lower lows, which is a negative signal, and you can see the RMO is just below the zero line. MACD has crossed over. However, we're having a lot of indecision candles. We have a lot of dojis and spinning tops. We don't trade those particular candlesticks, as there's no volume or no volatility or no. It's all down to speculation, and there's no true sentiment. So what we want to see is a true signal as to where price is likely to go to. The only thing that's in our favor at the moment now is the fact that we have all the moving averages above price, which is a negative sentiment indicator. There's more red on the chart here than there is blue, so we should be looking for negative sentiment. We have broken through a price support and resistance level low here. There's consolidation low here, and you can see quite clearly price is rallied into these areas here and failed to actually break higher. A lot of indecision, as I mentioned, so we do need to see some sort of indication candle. We have a bit of bearish engulfing here at the start of play on the Asian market, however not really that much. We have some negative sentiment intraday. We'll go to our 4-hour chart. You can see a lot of indecision here at the underside of this level. The institution is above price, as I mentioned, which is a negative indicator. We are seeing lower swings, which is also negative. So what we should be looking for is negative sentiment for the euro against US dollar. The hourly, here again, just above the institution moving average. Bearish engulfing candle a couple of hours ago, and the candle that's in play right now is also looking bearish. The MACD is predominantly below the zero line, and the RMO is just crossed below. And you can see a lot of the time was trading above, and the candlesticks were actually blue. Here we have the ultimate. We have the candlesticks recently have all gone red, red arrow, and our RMO is below that. So ideally, if we're going to see any further selling sentiment intraday, then what we should be doing is looking for the current low, the intraday low here, for this level over here to be breached, roughly around the 1288.45 mark. Get below that, and then we should be looking for some selling sentiment to the downside. We could tackle the lows down here, the prior low, which is a good 61 pips away at the 1282.61 mark. But ultimately, we should be heading back towards the 23.6 mark, down towards this 1272.40 mark, which is below us, which is a good, healthy, if I take it from the institution down towards this area, you're looking at about 155 pips. So I would rather put a trigger alert below this area here, wait patiently, get a nice bearish engulfing candle, move with sentiment to the downside, break and close below this would definitely confirm that we should be looking for further shorting opportunities, and it will stop you from actually trading consolidation. You can see quite clearly price has not really done anything, primarily yesterday in particular, because there was no real volume sentiment yesterday, because both the UK market as well as the US market were closed. So get a nice juicy close below this area over here, preferably a nice bearish engulfing candle, primarily on an hourly or 4-hour chart, and then we could start looking towards that 1270 mark down the bottom, as I mentioned, as our first target intraday. Let's have a look at sterling. Here again, more negativity than positiveness. However, very speckled. We have the only one over here, the moving averages bar the 30 minutes all above price, which is acting as a negative sentiment. The RMO on our shorter term time frames is looking positive, however our long term is still negative. So the overall sentiment for sterling against US dollar is one of negativity. We are trading below a major support and resistance level in the February tracement at the 23.6 level here, which happens to constitute this long term support and resistance level here at the 15,300 mark. Price broke above it, however not being able to consolidate above that area and pushing onto the upside, clearly breaking through it a number of days ago. Yesterday's candle very indecisive, as I mentioned, the no true volume yesterday, as the US market as well as the UK market was closed. We have a spinning top, and this spinning top all taking place below the major support and resistance level fib area here. So we have a lot of negativity. We have red candles, red arrows, the last candle. More negativity on the actual indicator chart here. RMO has been below the zero line, which is important for the trend. MACD is above. That's because of the consolidation. However, it is dark green, working its way back towards the zero. We want to see the ultimate indicator now would be to look for further negative sentiment back towards this consolidation low here, just short of the 1479.40 mark for this particular pair. So as long as it maintains below the 23.6 level here on our daily, on our weekly, you can see that's our weekly chart. Then we go to our daily, you can see a lot of price support and resistance through here, break of it, pull back. As long as it maintains below this 15,195 mark on the February tracement area of the current highs in January to the low here that we saw in March, RMO is very much below, and you can see the intermediate trend has been broken. Swing high, breach, swing low, swing low, swing low. So now it's actually making swing lows. You can see quite clearly, quite aggressively to the downside. We have a lot of indecision candles on our daily yesterday. In fact, Sunday, very small trading range. So now we want to see a nice bearish engulfing candle low. And as it stands at the moment, if we can break this consolidation area here in particular, this is the current low that we need to see price trading below in order to be making lower lows. Then we should be looking at 182 pips to the next level. So bearish engulfing candle closed here. Get that indication on this chart here, and then we could target that price support and resistance level, the low that we saw this year in particular, the March low here, just around the 1485.50 mark, which is 185 pips to the downside. So patience is a virtue here again, as we saw in the euro. Wait for those levels to be breached, and then we could look for further downside. The other option would be to see if sterling can actually rally above this prior resistance level, which is quite a strong one. Then we should be targeting back up towards this 1596 mark, the 152960 mark. Apologies, but everything's looking negative at the moment now. There's more negative sentiment, so then we should be looking for shorting opportunities. US dollar Swiss franc on the weekly chart. Just want to show you where price is trading. We've had second consecutive week trading above the institution moving average, which is a very strong signal because we haven't traded above this level in a very long time. I think the last time we were above this area here was back in 2010, guys. So very, very strong indication that the US dollar is doing some positive things. It needs to stay above the institution though, so it's important that we need to see price trading above it. You can see here the 22.6 mark here is my fib on my monthly time frame for this particular pair. Price has failed to actually close above it. It has rallied above it, but it's failed to close above that area. So very, very important this week in particular. It needs to maintain above the institution, and if anything, by the close of play on Friday, if it's trading above the 23.6 mark, then we're going to see a very, very clear signal for further upside. You can see noticeably there's a lot more blue on the chart here. Our longer term is looking very indecisive, hence the reason why we're trading into the institution here. We're trading into a major high, so we need to see price rallying above this area here. So as it stands, I've drawn a horizontal line where my institution moving average is, okay? Because if I can see where that level is on my shorter term time frames, i.e. daily, 4 hour, and hourly in the end, then it can actually guide me. So this is going to be my long term support for this particular week. So if I go to my daily chart, if I just zoom in, now you can see where price is actually pulled back, and you can see it's consolidated in this area. So now the institution is acted as support, and you can see the US dollar has started to actually go long now against the Swiss franc. So it reattempting this 23.6 mark. So it needs to maintain above it. You can see quite clearly we had price trading above it. Then we had a day that pulled straight back. So this was almost a tweezer top formation, the top of an uptrend, which is a negative signal. However, you can see the institution on our weekly actually acted as a support level on this particular pair. And as long as price maintains above this weekly institution horizontal line here, then we should be looking for buying sentiment. It's quite a close because we have the 23.6 here, but ideally if it maintains above this area here at 96028, then there's always chance for price to continue reattempting these current highs because the sentiment still wants to favor the upside. So intraday, this 960.28 level here, the white line, is going to be my institution on my weekly, which is going to be my support level. As long as price stays above that, then I should be looking for upside. If it closes below that, then we should be looking for further shorting opportunities. Last pair of the day is US dollar Japanese yen. You can see quite clear on the weekly here. Since August of last year, price has really rallied. The US dollar has rallied against the yen cross and showing up breaking these major support and resistance level fib areas here. 23.6, the 38, and now the 50. Broken above the 50, now we're seeing consolidation. We had a bearish engulfing week last week. That's engulfing. But as long as this 50% line or 50 period of the 50 fib line is below price, we should be looking at one support. You can see it quite clearly. Resistance, 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 breakout, pullback, support, and then moving up to the... And that's what we're seeing now. We're seeing a breakout, the pullback. Now we need to see the 50% line being the support area for our intraday time frames. You can see that our indicator box is primarily looking blue. However, one or two indicators are showing negativity, especially on the daily. You can see that R squared, SR, the MACD, and the linear regression all showing negativity, and it's primarily because we're seeing this pullback in play. Bearish engulfing candle last week in particular. We're seeing a bit of buying sentiment this week, but as long as it maintains above this 50% line, 50% fib retracement from our monthly highs, then we should be looking for that buying sentiment to come through. So if I go to my daily chart and just zoom in, you can see quite clearly we had a number of days of resistance, 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 bearish engulfing, and price rallied back towards the 20 period moving average on our daily. But you can see our 50 period fib retracement level is still below price, which happened to be a major support and resistance level in the past. As long as that acts, what previously was resistance now acts as a support level, then we should be looking for that sentiment to push on to the upside. As price has been moving higher, however, you can see that our RMO has noticeably dropped. But as long as it maintains above the zero, then it's still very much a positive trend. And it still maintains above the 50% line, then it's still very much in a positive trend. The moment it gets below the 50% fib retracement area, then we're looking for a real consolidation because that sentiment's really moved away from one of buying to one of negativity. Then we should start looking for it. But as long as the price is maintaining above 50%, we should be looking for positive buying sentiment intraday to see if price can head up back towards these levels that we were currently. So as where price is trading right now, back towards the current highs, you're looking at a good 137 pips away. So as long as that buying sentiment remains there, then intraday we should be looking for opportunities to the upside. So clear support intraday. There we go. You could use that as your support level now intraday. As long as price maintains above this level, then we should be looking for upside. Swing high, swing low here, apologies, moving to the downside. You can see that's clearly broken. 5 minutes not really testing. RMO is back above the zero line, MACD is above. So if anything, look to see if price can, the US dollar can still muster on that. This is a nice bullish engulfing candle after a lot of indecision. We should be targeting back up towards these highs here at the 103.305 mark, and that would clearly indicate a range of roughly 133 pips from where we are right now. So as it stands at the moment now, look for further buying sentiment for the US dollar against the Japanese yen intraday, and as long as the price maintains above the 50% retracement level, then we should be looking for nothing more than buying opportunities. That's for today, guys. As I mentioned earlier, no real news announcements today. Very, very quiet, but still waters run deep, they say. So just heads up, look for that sentiment where it is, and look to see what we have else coming out this week in terms of fundamentals and see how that's going to react. Other than that, if you are using this particular template, please back it up with sound money management rules. Very, very important. You got all the tools over here that are giving you all the bells and whistles. However, if you are practicing or applying the right money management, then this particular template is worth nothing. Okay, very, very important. I'll keep saying it until I drum it into you guys' heads. Other than that, keep it simple, and most importantly, trade serenely.